Hello there, it's Francis here from Generational Wealth Academy. Now, on today's video, I'm going to be, sharing with you one of the ways in which I trade using price structure or the structure of the market, as it were. And by that I mean, even as it relates to entries and exits. But what I'm going to be doing here is going to be focusing on exits, even as I am going to be making reference to my auto trader, the Supremo, but obviously, what I am going to be sharing with you today, is applicable, whether you enter a trade using an auto trader or whether you do it manually. I'm going to be looking at two currency pairs. The first one here, even as you can see at the top, corner there, is the Australian dollar, New Zealand at bottom right here. And the question is, how do I exit this trade? Basically where we got in, the price obviously coming from the left here, it got this far, went back up, and it bottomed here. So the Supremo, my auto trader, basically got us into the trade at this point. It would have been good to get in here, but it doesn't always happen. You don't always catch the reversal, as it were. So we got in here. Now, you might now ask, where do we come off this trade, or at least where do we take some profit if we had to? I would say place, to exit a trade. If you have enough if you have enough, as way of a lot size in the trade, then you could close some of your position or take partial profits and let the other possibly continue rising up. In this case, it was a buy. So where would you identify as structure here? Let's just we're going to be zooming in and out. So even by just looking at that, you can tell, like I always say, this is a structure low. Let's zoom out a bit more. This is structure low, high, low, high. I mean, obviously this is structure high. This is if you like, a significant high. Then this bit here at the bottom is structure low. So what you want to be doing here, if you enter the price and it continued going desired direction, you will be looking to come out at this point. As you can see here, I have placed my stop entry. Obviously, this is not where my stop loss rather. This is not where my stop loss was at the beginning when we got in the trade, but I have since moved it, knowing fully well that even if the price will come back down, I want to be taken out here, so that at least I walk away with some pips in my bag, as it were. So this is basically the structure of the market. It's a point at which there has been activity in the past. This is where we currently are, and we can tell there was activity at this point in the past. There was activity. You can see there was a lot of consolidation here, a lot of oscillation of the price. Same here. So that tells you that that is an area of value or a significant point in the market. Let's just mark it, for instance. So you can see round about there is where there was a lot of activity in the past, and hence, because that was the case, it would be also the case that if the market is to either if the buyers in this case are to take a break, they would have taken a break here, except that in this particular case they didn't do so. The price basically was just pushed higher even by the buyers. Even as you can see, it basically was just pushed higher. But now there seemed to be a little retracement. This is a live trade, by the way, hence you can see this pipsometer, as it were, constantly going up and down. So they are now trying to bring the price down, and I'm saying this is basically where I would want to come out. In a nutshell, I have placed my stop here, loss here, where below at the beginning, but I have since moved it up so that if the price down here, it takes me out of the trade. I have decided, to stay in the trade. Even now, I could have taken my profit and gone, but I know there's a possibility of it targeting the next structure. And obviously, we'll be having that somewhere around here. Let's just bring that into focus of value, or an area, a significant area as it were. This, in a nutshell, would also be an area where, as you can see here, there was structure here, the price coming down and then moving up, and coming down again, moving up. There was activity there. So we could also mark this point. So even though we went past this area of structure, as marked here, we went past it, the next, structure level of significance to me at least, there was activity here as well, because if you consider this, the price went down, up, down. See, even when it came down here, up, it came down again and up, there was, some activity here. Perhaps that is why, the price is struggling here at the moment. It could be, like I say, the buyers are having a break, only to continue up. We would have to wait and see. But the next area of importance to me, or the next area where I'll be looking for the price to perhaps struggle or stall, will be somewhere around here. Because it is important, it is very important when trading the market to know, where to possibly take profits or close your trade completely. And even as I said at the beginning, it's an area of value, an area of importance, and that tends to be, where you have market structure. Now, there are other ways of exiting a trade. I would also consider that quickly. Now, this is the Aussie dollar, New Zealand dollar. So to do that, especially those of you who use my auto trader, I'll let you know later on. So stay tuned till the very end, and I'll let you see the Aussie dollar, New Zealand dollar. Another trade I'm in currently is the Swiss franc, Japanese yen. This is the 1 hour time frame, and this is the 4 hour time frame for that particular pair. So you can see there are two entries here. There was an initial entry which I entered manually, but the auto trader, the Supremo, picked up another trade just a couple of hours ago. He picked up another trade here for me, and I don't mind. It's basically hopefully going to write it down. Now, even as I entered the trade here on my own, let's ignore the trade entered by Supremo. As I entered the trade here close to the top, where would I have placed my stop loss? I would have placed the stop loss, obviously not using structure in this case, not necessarily using structure. I could have used structure by going to the 4 hour time frame like so. But that obviously would have meant that the next structure high would have been, this point here. Now, how would you determine where to place, your stop loss, as it were? Let's go back to the 1 hour time frame. Okay, let's stick to the 1 hour time frame on this particular chart. Let's change it to 1 hour time frame. So what I would do, considering that I entered more or less at structure, which is a very good place at which to enter, I would then apply the ATR, which obviously is a default MT4. You can see it's ATR, which stands for average true range. You can also get that there by going to Insert, Indicators, and you would find, well, it's a custom indicator in this case. You'll find the ATR. So let's just apply it. Let's just apply it there. Let's insert that indicator. And I'll show you, I'll explain how it works. So this pop-up, window will come up. The value here is 14, which basically represents, range of the last 14 candles, counting the current one and the last 14 candles. We'll change it to 20, but I think 14 is fine. Click on OK and see what happens at the bottom of the chart. And you can see right there, it tells you, it gives you an indication of what the average true range is. There are two ways of finding out, explaining this, but I'll basically just show you the easy way out, the easy way to do that. You can see here, let me just, as it were, make it larger for us to see. We're going to be, we're going to be looking at, just 1 minute. So that's the number we're going to be looking at. Oh, okay. Oh, sorry. Let's get rid of that. So what we basically want to see is that number. So we want to basically, as it were, focus on this particular number. Here it says 0.106. Now, there are times you would have 3 digits after the decimal points. There are times when you will have 4 or 5, but in this case, it gives us 3, which I would say is 10. So the average true range of this particular pair, which is the Swiss franc the Swiss franc Japanese yen, is 10. Just ignore the 6. Average. Let's do this. So if you want to measure the pip count for each of those candles, consider, for instance, the last 14 candles, like I said a while ago, from here to here, that's the last 14 candles. Consider, how much they moved in terms of pips. That's about 14 pips. That's about 12 pips. That's about 11 pips. So you can tell the average was 10, even as we saw here a while ago. Like I said, ignore the last digit. As a matter of fact, let's go, then we will also see how to interpret or read the average true range. Let's go back to the Aussie dollar, New Zealand dollar, even as we saw a while ago, and let's pull up the average true range for this particular pair. Where is it? Okay, average true range, ATR. We'll leave it at 14, the last 14 candles. And if we go there, we will see that the average true range for this particular pair is 8, not 86, because each candle, did not move by 86 pips. Instead, it moved by about 8 pips. Now, this is a 1 hour time frame. I always tend to trade with a 1 hour time frame, at least when using my auto trader. So on the daily, on the 1 hour time frame, each candle, as you can see here, is about 8 pips. You leave out the last digit. That obviously will tell you what to do with that. So let's go back to how to actually now use the ATR for, setting your stop loss. So going back to Swiss franc Japanese yen, what I would do, we can now take this off. Let's take this off now. What I would do, being that I entered at structure, which is a good place to enter, like I said before, I would now, as it were, multiply what we found a while ago, which I believe was 10 pips for each candle. Each candle moved by about 10 pips, and over 14 period for an average of 10 pips. So what I would then do is multiply 2 1 minute. What I would then do is multiply 2 by the ATR. So the 2 times ATR, which is 10, will give me pips. So what I would then do is to place this as, obviously this as like the area of resistance. This is not an area, a line of resistance. Call it a line of resistance, and 10 pips on top of that. So you want to then add 10 pips on top of that. Let's say this is 10 pips. I'm not quite sure if that is what it is. So you want to add, 10 pips on top of a line of resistance, not necessarily an area. Perhaps that you could say that would then form your area of resistance. So basically, even though the price is now going down, if it was now beginning to move, and by the time it gets in here and goes past this second line, you can allow it to just hit your stop loss and take you out of the trade. Otherwise, basically, let the trade continue going down south, taking you into more and more profit. So even as we've seen here, there are 2 ways in which I exit a trade. I exit using structure, but then if you enter at structure, you want to then add 2 times your ATR. Some would use 3 or some others even 4, but I don't want to risk too much. I basically want to have a good risk to reward ratio. So I would tend to use 2 times ATR as my stop loss. Anyhow, let's looking at how to trade using structure and ATR even for setting your stop loss. And as I did mention throughout the course of this video, I do have an auto trader which you could try for free. It's called the Supremo. It basically is a trend trader. It goes with the trend. Even as you can see here, according to Supremo, south. If we consider the fact that this has been it's been going up all the while. This is a 4-hour time frame. Looking at 4-hour time frame, you can see it's gone all the way up from this bottom, and it basically has formed like a triple top, as it were, counting this area 1, 2, 3. So hopefully it's going to be heading down and we'll be looking to take profit. As a matter of fact, since we are here, since we've been talking of structure, let's consider that yes, this is indeed structure, and I've placed my stop losses here for the 2 trades. Let's move this one even lower so that, hey, I could get subscribe to join my Telegram tips and advice and answer a lot of questions. If you're watching this on YouTube, then definitely like and subscribe to this video first to get new videos that do come out. This has been a rather long video. I would say, if you have to pause it after going halfway through, do so and watch it again over and over again, and you would indeed learn a lot. Otherwise, you could ask me questions by joining my Telegram group, which is free to join, and you'll be joining a whole lot of other traders, even as we form a community. Okay, it's Francis Obasogie here signing out, and until next video, God bless.